Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Tellurian, covering their Q1 earnings and talking just a little about the state of the company. And feel free to add questions or comments in the chat as they come up. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for your entertainment purposes only because I can be wrong about everything they say in this video. You need to do your own research before making any investment decisions. All right, so Tellurian, I'm going to give just a super brief company intro. I realize I should start doing this. Most of my viewers, I think, know Tellurian fairly well, but I'm going to give the 10-second summary. This is a company that owns gas production assets, natural gas in down in the Haynesville. And they also own the rights to the Driftwood LNG export terminal. They have all the plans there. There's been some initial site prep work done, but they don't have the financing in place to actually go forward with the LNG export facility. So that's, again, just super brief overview of the company, the current state of the company, getting in a little bit deeper. Natural gas prices are fairly low, and they have been for a while. So the upstream, is operating, the actual natural gas production is operating somewhere around break even, but that leaves the company kind of at a major loss because they're burning a lot of cash, sort of continuing on a little bit of construction on the Driftwood LNG site. And, because they are burning down that cash, now they're in a state where they can't pay back their debt. And I'm going to talk about the debt in a little bit as I go through sort of where they're at right now in terms of, really the financials. But that's the state that they're in broad terms. And as of right now, they're looking to sell those natural gas assets, to sort of fix their balance sheet and give them options. There's a potential they're going to sell the whole company. We really don't know. I think they're looking all their options at the moment because they're not in a great state. So kind of what happens with Driftwood LNG itself is a bit of an unknown. We know that the company clearly intends to sell the upstream at this point. Whether or not they're also going to sell, essentially the rest of the company, which is the Driftwood LNG, export terminal, we don't know. All right, so now let me get into some of the details of the Q4 results. I actually put together, a small spreadsheet here to make it just a tad bit easier to see. For the quarter, they brought in $25 million roughly in terms of revenue. That was from their natural gas sales. And you can see all of their expenses, if we take out the depreciation, was in the same ballpark. So I guess I probably should do that. If I just make this 0, their depreciation as such, we can look. Oh, I don't have formulas set up here. Let me add this up real quick. I'm sorry, I should have already done this ahead of time. So if I do sum of, well, let me just do C6 plus C7 plus C9. That's excluding the depreciation and depletion amortization. They had, $33.4 million in operating expenses. So they were even running at a loss this quarter. That teeters back and forth depending on natural gas prices. As just a side note, natural gas prices are still low. This is where you can see the futures quotes. I guess this is going forward, they're still expected to be low, but I usually look at a couple months out and say, of course you can look at next month, but you can also look at, October, November, when these prices usually, November is when they would start to ramp up for winter. You can look at your yearly chart here, and let me fix this real quick so you can see that. And that might be a little, maybe that should be easier for you to see. So you can see prices were elevated in 2022 and they've come down throughout 2023, and even further now, they're still bouncing around at basically quite a low. I think these prices here, the futures were years and years out, so you don't expect to see a fair price on those, but gas prices are still very low, and that in large part is what is flipped with Tellurian, where their natural gas production, the revenue they can get from that is just not enough to sustain the company and give them a whole lot of breathing room. So that's sort of the backdrop for this. That was just 1 month, but you see the same trend across every month of the futures here. It's just natural gas prices are low. And going back here, you can see that even for the quarter, they didn't even cover their operating expenses. Despite the company, I will say they've cut their G&A expenses, and they like to highlight this that, hey, year over year, I think this was their quote, was year over year from Q1 of 2023 to Q1 of 2024, they cut the G&A expenses in half. But they're still not even, they don't even have positive operating income. So, yes, they've cut, but it's still not enough given their revenue has just dried up so much due to the low natural gas prices. And, as I said, on top of that, they are burning money spending on Driftwood. So, I'm going to go through their cash flows in just a moment. And let me just flip over to their actual statement of cash flows, because that's the best way to look at it. I guess to continue on with their operations, the final net income, or the net loss, was about $44 million on paper. But if you go down and look at their actual cash flows, as I said, a lot of that 21 million was from your depreciation, amortization. It's a non-cash expense. Doesn't if you're looking at how did the cash flows change, I'm not gonna it's not cash flows, right? There were some other balance sheet items that they got some help on, but then some others was kind of neutral. So you see the changes in working capital weren't major. So in the end, the actual cash expenses were $8.5 million for the quarter. But then here's where it comes in, and you can see they actually spent $6.5 million on natural gas, developing their natural gas properties, and then they spent, and this is the big one, $26.3 million still building up Driftwood, right? Building up the LNG export facility. This is their ongoing work that they have Bechtel doing. And that's really what's putting them from a roughly break-even company. Even losing $8.5 million that's not good, but in terms of the dilution they would have to do for that, it would be small compared to what they are doing. And what they are doing is a lot more dilution, because they are continuing to spend quite a bit of money relative to the operations on Driftwood. And so that is just a really, really big suck on their cash here. And this was, as I mentioned, funded through dilution. And you go down here and you can see that was their big, where their cash flows actually come in from. It was proceeds from common stock issuance, right? They brought in $18.2 million in the quarter, or 18.3, I guess it would be if I round it to just from issuing stock and diluting the common shareholders like myself and presumably many of my viewers here. And so that is where they're at the end of the quarter. Scroll all the way up the top here, you can see they were up to 836 million shares outstanding. So I think they were, if I recall correctly, previously, before they, last year when they voted to increase the authorized share count, I think the cap was 800 million shares. They are now officially past the 800 million share count. And, it's not great to see. I actually put together a chart. Let me zoom in so you can see this a tad bit better, hopefully. And, this is what their shares outstanding has looked like over time. So I started this all the way back in 2018. They were around 250 million shares outstanding, and they did a pretty good job at the time. They weren't issuing very much at all. I think this may have been right after they did the secondary offering, somewhere around $10 per share. And so I mean, maybe I could have started a little bit earlier and saw that slight bump up. But they had 250 million shares outstanding all the way until about the time of the pandemic, and then they did start diluting around then. They weren't in a very good spot at the moment with the Petronet deal falling through. And they continued to dilute as sort of a steady state, and then they then it sort of was flat for a bit, and I think that's really when natural gas prices were allowing them to have plenty of cash on hand in 2022. And, they didn't have to continue issuing shares in order to fund the company and fund, at least some work on Driftwood. They had that cash in the bank. They had lots of optionality. And then here, last year when the natural gas prices were really starting to drop and bottom out, and as the, everything else fell through with the company, that's when we've seen this dilution really, really step up. And so you can see in the past year, since August of last year, they had about 582 million shares outstanding. They've issued almost an additional 250 million shares in the past 8 months or so. And so that as a shareholder is clearly not great. That's the amount of shares are outstanding when I first invested in the company. So it's a little it hurts. It hurts here. And sorry, I'm pointing here. I'm making a little joke. It hurts here, but it also hurts. Obviously the share price. It's not great. And at this point, I'll go in further and talk about sort of their current state. Let me go on and finish talking through their Q1 results real quick, I guess. So that's where that in terms of dilution and their current share count. I say current as in a couple weeks ago. Could be even higher as of today. Couple things also that were in this report. If you go through and look at the details, that's not the right document right here. There's one exhibit that's attached to this. You can see they had another change order number 12 to the actual phase 1 contract for Driftwood. And there were two things that I picked out of here. One is that they actually decreased the scope of their prior limited notice to proceed. Where is it at? decrease. So they agree that the prior change order number 11, is going to decrease by a certain amount because they are sort of removing some stuff. And it's all redacted. We don't know what it is, but it is meaningful to say that they've, reduced what they're doing for one of their prior, some of the prior authorized work that they were planning to have Bechtel do, to actually start on, and they were going to be able to pay for. And so presumably they've, dropped that, and because they're trying to preserve cash at the moment. One of the other things in here that I also noticed was they have this one right here. They've had this clause since, I think, very early on in the EPC agreement that they have with Bechtel. Hi, Travis. Thanks for hopping on stream. Travis Rivers says, "Hey, Dustin, happy Sunday." Happy Sunday to you too. Thanks for hopping on here and chatting. But they have this clause here in the lump sum contracts that they have with Bechtel for basically, if the owner, which is Tellurian, if they fail to issue the notice to proceed by a certain date, then, either party can terminate this. And this is basically, kind of like the validity time for the contract, right? They set up this whole contract, and Bechtel is giving them the option of like, cool, this is good until a certain date, and same on Tellurian side. And so past that date, it's kind of like, well, if anybody wants to, we haven't actually gone forward with it, we haven't gotten the notice to proceed, then, either party can terminate this and say, well, we're done. We don't want to, we don't want to go forward with this anymore. We've got other stuff going on because it's been enough time, enough things have changed. And in the past, they have done this, and they've extended this date out, but they've always actually put what the date was in the filing. This is the first time right here, this highlighted section, it says, if the owner fails to issue the notice to proceed in accordance with section 5.2b by, this redacted date here, then either party shall have the right to terminate this agreement. And in the past, they actually listed this one. And I don't know that this is particularly meaningful. I do wonder if previously publishing those dates, those were used, in negotiation sort of against Tellurian, because negotiating counterparties knew that they had sort of this cliff coming up when they had to actually get things done by in order to move forward with the current contract. But again, it's really hard to say. It certainly doesn't hurt them, but it would be nice to know this date. The other potential bearish interpretation is if this date was only extended by a very, very short amount of time, maybe they only gave them till, the end of the quarter or something, but by the end of June to actually get things done, that would be a very, very short extension. I think in the past we've seen extensions that were on the order of, a year or at least 6 months, a fair bit. So I don't read too much into this, but it is something that I picked up that was, different from the past. So just something to note there. All right. This is also a quick reminder. If you haven't looked into the financials of the company recently, just to recap here, they do have a fair bit of debt, right? So they had, at the end of the quarter, $51.8 million of cash on hand. But then you go down to their debt, and they have, $25 million that is current, meaning they're going to have to pay back in the next year on paper. But then also this $316 million that is, past that. There are some pretty nasty covenants on those to where I think there's sort of a cliff that's going to happen in October of this year. And I can go through that in a moment. Let me find, let's go on down. Let me find the, let's see, 2028 senior note. Yeah, that got me right to the section I wanted. So this is split out between 3 different types of debt. They have the convertible notes that are due 2025. They have just the general secured notes due 2025. Then they have the baby bonds, the unsecured notes due in 2028. The $57.6 million of baby bonds don't really worry me. Those aren't due until 2028. I don't think they have any particular owner's covenants that I can recall on them. The nasty parts are on these notes right here, which is the majority of what they have outstanding in terms of debt. These senior secured notes through 2025 are the worst, and they have a, let me find it right here. There's a minimum liquidity covenant or whatever you want to call it, some sort of a clause on that with this one. So it's as of on or after October 1st, 2024, this year. So just in a couple of months, they can redeem up to the entire principal amount of the senior notes for cash purchase price equal to the principal amount of the senior secured notes being redeemed, plus all the interest, if the company's liquidity falls below $240 million. And again, it's not completely clear what the calculation is for liquidity. Probably could look it up on there, but I'm going to guess the company is not really in a great spot to have that. I don't know if this really, I don't think this is cash balance, right? Because they also have a minimum cash balance clause here. But in terms of, it's not clear how they're actually calculating it, but it's not going to be good for them. Clearly, there's some threshold, in October 1st, 2024. They really want to get this debt off the books. I've talked about this in the past. And in addition to that, they also have this minimum cash balance that they have to hold. And they had this threshold before. They got it reduced down. They've done some amendments. They did a whole bunch of these amendments in the past. They finally got sort of an agreement. But going forward, it was down to, I think, $25 million in this month. I think it goes up to, I had the notes somewhere. It's in this 8K. I actually haven't linked out yet. I can find it for you. Tell you definitively. Minimum liquidity, right? And so this, I think, was the 8K from February of this year when they amended things. I believe this is the most recent numbers. And, they have this cash balance they have to hold on hand. Tellurian does, from $25 million all the way through the end of April. So they're already through that. Now, in May, it is $30 million. In June, it's $35 million. And then it goes back to $40 million for the remainder starting on July 1st. And so, this is one thing that clearly is sort of driving the company to, run the dilution and actually issue stock and keep some cash on hand. They can't run the company down to, practically nothing in the bank account because they have this covenant here because of the debt. And, it sort of escalates up. And my initial speculation early on when I saw this was, well, we know that they're trying to sell the upstream assets. They're probably trying to close the sale by the end of April. So then, these higher cash balances, $35 million, whatever, don't really come into play because if they can sell off the upstream assets, pay off this debt, then they're free of these covenants. And, we've seen that clearly didn't pan out to where they didn't get a sale through by the end of April. It remains to be seen what's happening at the current moment. But that is one big chunk of their debt. So let me go back here and, talk about that. As I mentioned, those are the senior notes due 2025, the unconvertible ones. And their current principal amount they have outstanding is just shy of $224 million. It used to be 250, I believe. They sort of issued some equity and got that principal balance reduced a little bit, but that is where it stands at the end of the quarter. And then they have this $83 million, $83.3 million of the convertible notes that are due in 2025. I think those also have some covenants, but I don't think they are. I don't think they have that minimum liquidity one that is the most onerous. And again, that's just a reminder of where they stand right now in terms of debt. And that is all relevant when you start to look at, what are they going to do with the proceeds from an upstream asset sale? That's clearly what they're going to do. They're trying to fix the balance sheet. They said this multiple times. And, fixing the balance sheet is code for paying off this nasty debt here. And, this is where it really comes into, the future of the company. What are they going to be able to do? Does come down to how much can they get for those upstream assets. And, there was a recent, this is a recent story I wanted to mention. They had this one, they said, hey, Tellurian's actually sent people home so that they're no longer actually producing upstream gas. Presumably that means they're very, very close to a sale, and they're just selling the assets there. So we'll have to wait and see what happens. That was just 4 days ago. That was on May 1st when this was actually reported. But, even this story says, they've been valued at, up to $365 million. I've seen reports online that have it valued anywhere between, 250 million all the way up to 500 million. That's the ballpark that I put it in last time, based on, one or two comps. It's really hard to say what they're actually going to get. Worldwide Images asks, are they going bankrupt? I don't know. This is, I'm talking through this right now, what we can expect from the company. I think a lot of what's going to happen is going to, we know that they are looking to sell their upstream assets. That is very clear. This is even a bigger indication of they're actually sending people who are working on those, that were producing the gas home and telling them not to work. That is a pretty big signal, in my opinion, that we should hopefully hear something soon, that they've actually struck some sort of a deal. I don't know why else you would stop producing gas if you weren't imminently, making a deal. And the definition of imminent is, a little up to interpretation, let's say. But, if they're probably signing something, but it's going to come all the way down to what can they actually get for those assets. If you look at their actual balance sheet and what they value those at, let's see, where's the right. So they have their carrying value of those is $356.5 million. That's kind of how they're accounting for it. There's a lot that's going to be goes in out of what Tellurian paid for these things, and we know, as for example, the acquisition they did of, what was that, 2 years ago, the Insight acquisition, where they spent $125 million, if I recall correctly. That's probably going to be on their books at an initial value of $125 million. Is it still worth that today? Who knows? But that's how it's going to be on their books. So this figure gives you at least a ballpark. But again, it could be off by plus or minus 50%, which is pretty consistent with, as I mentioned, we've seen online the reports that put the valuation of their upstream assets somewhere between 250 to $500 million. And so whether or not they're going bankrupt is going to depend quite a bit on what they can get for those upstream assets. I think it's personally, again, not financial advice, I think it's unlikely that they would totally go bankrupt, because I think if they want to try to sell the whole company, I have to imagine the whole company is worth more than the sum of their debt, right? And the sum of their debt was, where was it at? I mean, I guess I can add it up from here. The 25 plus 316.2, $341 million in debt. I have to imagine the combination of Driftwood and their upstream assets, if they were to just sell the whole company, would be worth more than this $341 million. Even if you take off a chunk that Lazard, the investment banker they've hired, Lazard is going to take a chunk, executives are going to take a chunk. But I mean, you sort of ballpark it, figure hopefully for the upstream and Driftwood, they could get somewhere more than $500 million. And, hopefully there's still something left. Now, that doesn't mean that it's going to be a positive return from where the stock is at right now. I think if they struck a really, really bad deal, or bad in my opinion, it's not impossible they could strike a deal where current equity holders would not make their money. Now, I don't think that's likely, frankly, because, and again, this is, maybe I'm too optimistic, but I have to, if we see valuations for their upstream assets that are somewhere between $250 to $500 million, take something in the middle, call it 350, that roughly pays off their debt. And again, that's why, you're asking, are they going bankrupt? I think if they just sell the upstream and they kind of only break even with their current debt, and maybe I'm being too pessimistic, because they keep the baby bonds on the books. They don't really have to pay those off. It doesn't cost them too much to continue paying the interest on that all the way until 2028. So subtract off what's that, roughly $57 million. So really the hurdle rate here for selling out the upstream assets is $284 million of whatever they bring in is going to go straight out the door to pay off that debt. And so if they get $350 million, they pay off all the 2025 notes, the convertible and the non-convertible, and that would net them, what's that, $65 million cash on the books. Again, that would be if there's no fees, or so figure maybe slightly less if they have to pay Lazard or whoever. But again, I'm ballparking numbers here. Let's just call it $50 million. They got $50 million in. Now you have to ask, how long is that going to fund the company? Go up here and look at their, this is where you're really looking, is going to be what are their operating expenses should turn down to basically zero, because they're no longer going to operate those upstream assets. They're not going to have development expenses. They're not going to have any depreciation. So it's basically your G&A, right? So if they were spending roughly $15 million per quarter, I don't know why that just jumped over there. I'm sorry about that. What happened? I had two windows open. I don't know why I decided to close that. My bad. So, if they have $15 million of G&A expenses and they got in $50 million, through the door from their upstream asset sales, add that to roughly the $50 million they have on hand at the moment. That gives $100 million. They could fund the company for slightly more than a year if that was, the sum total of what their expenses are. Just that $15 million per quarter in G&A. And so if they did that, that would at least give them a little bit of, of run rate to commercialize Driftwood. At that point, it's anybody's guess. They have not commercialized Driftwood yet. This is where you really have to say, do I believe that they're going to be able to get it done? Are they motivated enough to get it done now? And who knows, right? That's the gamble you're taking on Tellurian. They haven't gotten it done yet. I do have confidence that they're going to get the upstream asset sale done, because they've hired this investment banker, Lazard, and Lazard is going to get it done because they're going to get paid to do it. And, this is in their wheelhouse. As far as going forward on Driftwood, I don't know how much Lazard is going to be able to help them with that, or if Lazard is actually trying to get them to sell the whole company. And, there's a lot of variables in that, right? I don't know what Driftwood is actually worth. The best thing you can look at is, as a ballpark here, is, you know, what have they put into it so far in terms of the balance sheet? That I think should be a starting point. And so if you look at that, you look at where do they split out their PP&E? Let me find. Sorry, now I'm looking around, picking around real quick. Yeah, so here's where they split it up. They actually give you the breakdown of when we say, you know, property, plant, and equipment on the balance sheet. This is how we're actually splitting that out and accounting for everything. And they say for Driftwood, their net carrying value on the balance sheet is $686 million, just rounded off there. So, you know, if you add that up plus their upstream, they call it and they say, hey, we, with our carrying value, we think we have $1.1 billion of PP&E in terms of our balance sheet value. And so if you looked at that and you said, well, if they were able to sell for $1.1 billion, 1.1, subtract off the, what was it, 300 and, I can't remember exactly. Sorry, I'm so bad with my memory. Call it 1,100 million for 1.1 billion. Subtract off somewhere in the vicinity of $350 million in terms of debt. That gets you $750 million of assets if they were able to get that $1.1 billion in terms of a sale value. And that's, again, just a ballpark. We don't know what somebody is actually willing to pay for it. But, you know, divide that across your, you know, what is it, 800 and something million shares outstanding. It's at the very top here. 836. You know, that would be a payout of 90 cents per share. Again, ballpark numbers here. That's really the best you can do because there are so many variables, so many unknowns. But that gives you an idea, which is to say, at right now, trading around, what's it, 40 or 50 cents. You know, it's almost a double if that were to happen. Again, I can't guarantee any of those things, but that's kind of where I'm looking at and saying, you know, maybe it's not so risky at this point. Granted, you can look at it and say maybe they had more shares outstanding. Maybe there's be more fees taken out. There's a bunch of things where you can then adjust it and say maybe 40 cents is kind of fair value even in a full sale scenario. It's you know, I can make an argument as to why the company could end up paying out $2 per share in terms of what they can get. I think there's a lot of value in Driftwood, right? The balance sheet value is somewhere, you know, plus or minus 50% or 80% of what somebody's really willing to pay for. You know, if somebody really wants an LNG export facility, you know, that it fits strategically with their business, they might pay double of what the balance sheet value is. You know, that could really be, you know, really be good for shareholders, you know, for people who are purchasing at the current price, let's say. Will a stock price rise? I have no idea. I wish I could tell you yes. I can tell you I am still holding on to my shares. I don't think that... I don't know for sure, right? I can't really tell you. Nobody's going to know that. It's hard to say. I'm sort of giving you all the numbers and all the things as I'm seeing it to kind of help you understand the current picture and make your own judgment on whether or not you think that's going to, you know, whether you think that the risks inherent in the current stock are worth taking. So that's kind of, you know, how I'm looking at it. Let me see, go through my notes here. Kind of got through, you know, and there was also a Bloomberg article that did talk about, you know, there was a company, Pacific Energy, that was in talks with, you know, they said they were in talks with both Tellurian and Next Decade, you know, and another company that also has an LNG export facility, you know, for potential, you know, natural gas cargoes. That was also just a couple of days ago. And that does get some evidence, and we've heard management, I don't think they're lying, where they say, hey, we are having these discussions for actually commercializing Driftwood. I think, you know, if you look at the Tellurian shareholder letter, you find that letter to shareholders. No, I want the most recent one from March. So they do talk about this, and they say they are... Yeah, so they continue to talk to folks. Where is it at? I'm not finding the language that I want, but they sort of say that they got their commercial offerings back in line with the market price. I'm trying to read and talk at the same time. It's not working very well. But somewhere in one of Martin's shareholder letters, he was very clear where he said, you know, we've gotten our... the contracts we're offering, people we're negotiating with for actual offtake from the Driftwood terminal, you know, we've got our price back in line with what we think is the general market price right now. And, so at the same time where certainly seems possible they're just going to sell off the whole company and, someone else is going to do all of the commercialization of Driftwood and continuing to build that out. Driftwood, it could still happen within Tellurian. Management still says that they are working on that is their focus. It remains to be seen. I think it's going to be, if they got an attractive offer for the full company, I think it'd be really hard for management not to just jump on that and take the payout. I think for shareholders, as it has always been, if they can make Driftwood work under Tellurian, it's probably going to the best long-term value for Tellurian itself, for the shareholders. But, again, you kind of have to weigh a lot of different things to know, is management, do they want to do that, right? Are they incentivized enough to do that? And I think to some degree they are, but, it will take some time. And maybe if I want to talk about that for a minute, you do go to their, do I have the proxy statement open? There are those FID based bonuses where there's a news story that came out. I don't know where it's at. This thing is humongous. FID is going to be in here a bazillion times. Phase 4. Yeah, so right here, management is incentivized to actually get an FID because they have these cash bonuses they're going to get. And these are for phase 1, phase 2, phase 3, phase 4. We're talking, even just for phase 1 right here, these guys stand to make millions of dollars. But on the flip side, you also have to wonder, what would they get in terms of a change of control? What kind of payout would they be able to negotiate and tack on to any agreement that is made if they were to sell the whole company? So yes, I can look at it and say management is incentivized to actually develop Driftwood and get to a positive FID. But on the flip side, I actually don't know what to compare it against because I don't know what their incentives would be, in a deal to sell the company. They might be able to get something slipped in there, to pay out bonuses if they felt like they got a good deal for the company. And so I don't know. I think they're probably incentivized both ways. I just don't know which one is going to be more. And frankly, it might be a lot easier for them to just sell the company because if they have an offer in hand, they're just like, cool, let's just sign it. We'll get it. We don't have to go through all the hard work of lining up all the commercial contracts for the offtake. We don't have to go through the work of finding equity partners to help us, actually fund the equity portion of the terminal itself. So I could really go either way in terms of, is management, what are they incentivized to do? But then also you have to ask, is management capable of doing that? Even if they were massively incentivized to actually get to a positive FID, they may not be capable, right? We've seen this in the past where clearly they had the incentives and they had even, some macro tailwinds helping them out and they just weren't able to get it done. These are largely different people, so maybe they'll do better. Maybe they won't. It's really hard to say. Clearly they don't have the experience that some of the prior management did, who still couldn't or didn't get it done. I'm not gonna say couldn't, they just didn't get it done. So I don't know. That's a really tough one to kind of to think through what's going to happen there. So, one other thing I wanted to go a little bit deeper on, just to remind you guys, that sort of does drive home the position that they're in with the debt that they have. I mentioned those minimum liquidity, the minimum liquidity they have to maintain. That I think it's $30 million in May, $35 million starting in June. So that sort of drives the company to have to issue shares because they have to get that cash balance back up. They also have to, cash has to go out the door for the payments they make. And so I have, maybe I didn't save the link to it. That's my bad. Yeah, I should have saved that. And I don't think it's talked about in the actual 10Q. Anyways, I will just talk it through real quick. They also pay shares. They have this. I wouldn't call it a share dividend, but it's on their debt. They also pay shares. If I had it, it would be easier just to show you. But they pay out about 3 million shares per quarter to the holders of the debt. And that is in and of itself dilution. Those folks are probably selling the shares as quick as they can get them. But on the flip side, if the share price is under $1.35 per share, the volume weighted average price, Tellurian also has to pay cash to make up the difference between the current, the volume weighted average share price and $1.35. And so, when the stock is trading roughly at, let's call it 40 cents, you have $1.35. minus 40 cents. They have to pay out 95 cents per each of those 3 million shares. What happened there? Sorry, let me do that. 95 cents times 3 million. And so they're actually paying just shy about $2.9 million here in cash every quarter, on top of the shares that they issue to those debt holders, right? And so this is, again, one of the reasons why they really, really need to get that debt off the balance sheet, because this 2.8 or $2.9 million that they have to pay, which again goes up as the share price goes down, also has to come from somewhere. Where does that cash come from? Well, the only cash they're really bringing through the door today that's meaningful, that they could use for this, is, again, through dilution. And so they are sending out shares. They're paying them shares as part of for the debt holders, and they're also issuing shares to get the cash to pay them, because the share price is under $1.35 per share. And so they are not in a good spot. Selling those upstream assets, if they can get enough cash to pay off all of those 2025 notes, and then to be able to get the balance sheet looking better, that is actually going to go a long way towards helping the company have some options. I mean, I think as of right now, it's pretty clear to anybody who looks at their financials, they're in a pretty bad state. But again, they do have these assets. So we're in this state where there's very, very, very high uncertainty. And so this is not directly answering your question of are they going bankrupt, but this is giving you a lot of, just current state. This is where they're at. And so you really have to decide if these are risks you want to take. So, because the answer to are they going bankrupt, they might, right? They might not. They have assets, they have options, but if they do, they're not able to execute on those. Once again, things are going to just get worse, and there is a very real risk of bankruptcy here. If this gets mismanaged, if they can't actually sell the upstream assets for a meaningful price, for anything close to what we're looking at. If they only got, let's say, $200 million, that would not really help very much, because one thing you have to also keep in mind is when they sell those upstream assets, it's a lot of cash coming through the door. They can pay off some of that debt, hopefully all of it, or all of the 2025 notes. But at the same time, they're losing their only actual stream of revenue, right? After that, the revenue is going to be probably $0, because I don't think they have any other streams of revenue at the moment. And so really, they're just going to be burning down cash at that time, and diluting to actually keep things going. And so it is still even possible they could sell the upstream assets, pay off the debt, and a year or two later, if they're not able to make meaningful progress on Driftwood, they would still go bankrupt, or at least sell the company at that point, where once they have even more shares outstanding, and maybe Driftwood is worth even less because there's more other players who've actually started to move in the meantime and have more offerings available. So it is very risky at the moment. This is not intended to try to sell you on Tellurian. This is intended to just give you the information so that you can understand the risks and also the opportunities, right? The opportunity here is they have all those assets. I think those assets, if they get a decent price out of them, could immediately, if they got a good price in the upstream, if they came out tomorrow and said, we've signed the contracts, we're going to get $500 million for upstream assets, I can't tell you for sure, but my guess is that the stock would probably go to at least $1 immediately, maybe even higher. It's really hard to say, and again, I can't predict the future, but I think that would be a very, very positive sign for the company if they were able to get that amount of cash in the door. They could say, hey, we can pay off all of the onerous debt we have and rebuild our war chest in order to actually get towards commercializing Driftwood and have that over the finish line. I think if they were at that point and then they started making any real announcements toward commercialization of Driftwood, any sales and purchase agreements or equity partners, that very quickly starts to say, hey, now we have some meaningful progress. Now, again, I can make pros and cons lists all day, because here's another con even on top of all of that is right here, 836 million shares of common stock outstanding. If they don't stop diluting right away, that's going to balloon and balloon and balloon. I think I showed you the graph here. It's going up and to the right, which is not what you want to see with your share count. And where that stops, who knows, right? Until they have that upstream asset sale closed and they have a lot of cash in the bank and they don't need to dilute anymore, this is going to continue to go up. So it is also a good question of, even if they were able to make good progress on Driftwood, how many shares is that going to be split across? I don't know. So that's kind of the pros and the cons as I see it. So I think there's a fair bit of folks on the stream. I don't know if there's any other questions or comments. That's mostly what I wanted to go through today to kind of give you an overview. So as one other thing I can mention, as I give it a couple minutes for folks to see if they have any questions or comments in the chat, feel free to put them in there. There was some, let's call it drama in terms of the at the market offering. At the market, and so this was actually a big deal amongst some folks that I chat with the stock, so for context, there was this announcement. Let me pull this one up here. This was in March 15th, where they said, hey, we changed sort of the person that we're doing, the entity that we're doing our at the market offering with, and they said, I think it was in this filing where they said, hey, we don't expect to be doing any more dilution through our prior one, right? So we sort of switched the agent that we're doing to this Virtu, and we don't expect to use the old one. But then when you looked at the 10Q that they filed, they said, yeah, of course we have it, but we have this new one, but we also maintain the old one. And they had this somewhere in here where they said they have availability under this of, not the 366 million, which was sort of what they had remaining on the old one, that they're switching to the new agent. They said, oh, we have actual availability to raise $714 million under our equity offering programs. And that was a major, major surprise to those of us who follow this, because we thought that they sort of did a lateral move to say, close the old one, just switch who we're doing who we're using to actually issue the shares and the agent from the old one to the new one. But then this one said, actually have both of them still available. But just also on, I think it was just on Thursday or Friday, they actually filed an 8K and said, hey, we actually terminated the old one. So if you were looking at that, on May 3rd, they terminated the old one with TR Winston. And so now they only have the new one, and they have, $348 million of availability under that new ATM agreement. So if you followed that at all, that is, sort of has come to a close. They actually did close off the old one. They're not going to dilute 700 something million dollars. Not that they really could. I think that would kill the stock. They wouldn't actually be able to get that much money out of it. But, that they weren't lying to us, right? This is partially a bit of a test for management in terms of, were they lying to us when they said, hey, we're just switching to the new one, the old one, we're gonna close that one down. But they actually didn't close it down. And they did. I know that a number of folks wrote to them after the 10Q came out to say, what the heck is going on? This is not what you told us. And I think it remains to be seen, was this intentional? Was it unintentional? Was it something that when they went to go actually file their 10Q, they said, oh, actually we technically have the availability. We technically have them both, so we have to report it here. I don't know. You can make up your own mind. I think management has, let's say, been, not going to say untruthful, but a little shady in the past of certain things. And so I think, if you've been in the stock long enough, you do have a little bit of skepticism of management. So, did they pass this one? Did they pass this test? I don't really know. They did end up closing it down. So it's hard to say. You can make up your own opinion there. Sorry. So I do see, will the sale happen this week? I have no idea. I would love for it to happen this week, or for some announcement, right? I think the sooner the better, obviously. And even if they announce a sale this week, it also matters, when are they actually going to close on it? When is that cash going to come to Tellurian? Because they're going to have to dilute and, keep their minimum cash balance up all the way until that point, and so even if they announce it this week, they're not totally out of the woods, but it would be really, really good. James DeCirio says, share buyback after the Upstream sale. That would be interesting. So, I think if it's really hard to say. Like, I can't imagine. I'm going to guess they're not going to buy back shares, even if they had a really, really positive Upstream sale, because they have no source of revenue, right? If they start buying back shares, they couldn't do a whole lot of meaningful buybacks until they have other revenue coming in, because very quickly they're going to exhaust the money they have, and get down to a point where they have back this, less than a year's worth of cash expenses on the balance sheet. And once they get their run rate down below a year of cash, as they are right now, they have to put on there and say, hey, we have a going concern. Our basically that language in the 10Q and in the 10K that says, hey, there's a going concern that our company is not going to be around very long. And so I think if they were to do a buyback, they would be burning money pretty quickly. I think it's more likely that they're going to use some of that money to, toss to Bechtel to actually continue at least a little bit of work on Driftwood, because all those contracts and that relationship with Bechtel, that's actually a key part of the value of Tellurian and Driftwood itself, because that is that is their path. The one, maybe I haven't talked about in this video. I think a lot of folks who follow the company are well aware that their value proposition over other LNG export would-be's is sort of twofold. Number one, they have all the permits in hand, so they are not at all gated on that. This LNG export pause does not impact them. The other thing here is their time until they can actually start shipping gas. If they were to get all the financing lined up today, I think they'd have gas starting shipments in, I think, 2028, right? I think it's usually they have about a 4-year period where if they were able to get things started, they can start shipping 4 years from now. Other projects don't necessarily have that availability until 5 years or 6 years, maybe even longer out. And so for somebody who wants to start taking that LNG, the sooner they can get it, obviously the better. And so that I think it's more likely they would do what they can to actually do something to keep Driftwood slowly moving in terms of progress, but also to keep Bechtel around and not have Bechtel walk. As I mentioned, we don't know how long, going back to this thing here, we don't know how long Bechtel gave Tellurian until they're able to terminate this and that just terminate and then walk away from it and get some potential money from it. I think they have this lump sum payment of $5 million, which clearly Bechtel wants to do the whole project. They're going to make way more money than $5 million if they do the whole $8 billion worth of work for them. But again, if Bechtel doesn't see this happening, we don't know what this date is. And so that, I think, is what, if Tellurian keeps giving them money, Bechtel is going to be more apt to continue extending this, because at least they're getting something from Tellurian. So Worldwide Images asks, the price of gas has crashed. I mean, not recently, but yes, over time it's gotten lower and lower, and it's been low for a good year or so. That's what really got Tellurian from a profitable natural gas producer that had sort of the optionality of LNG export to now an unprofitable natural gas producer that has, is just burning cash for whatever it does on the LNG export facility. So again, I'll bring up the charts to show you. We can even look at June 2024. These prices should be pretty close because it's only a month out. When you ask has it crashed, go to the day here, make it so you can see it. It's crashed relative to where it was in 2022. And it's continued to come down. It came down throughout 2023, and it's gone down and down and down. And so it was in the threes throughout last year. Now it's down, about $2. So yes, it's not that recent, right? It's been a couple months, but yes, it has. I would say that's a crash relative to these prices. And again, these are futures, so were these prices out here reflective of reality when they're 3+ years out? Maybe not. Futures do get more and more real kind of as it gets closer and closer to when that gas is going to be delivered. But I think starting and looking a year or 2 years out, clearly they've gone down quite a bit. So yes. And why has management been so quiet? I don't know. Have they been quiet necessarily? I don't know. They do have some communication, but I just don't think there's not that much to say, right? They're going to make material announcements when there are material announcements. They have done these shareholder letters, and that's been their communication mechanism. Clearly we got a lot more when Sharif Suki was still involved and was doing a weekly YouTube video and giving some some insight into what management is thinking about at that point. I think you can make your own opinion on whether those videos ended up being, a net positive or not. I think it certainly it gave insight into how they were thinking about things, at least. Um, still didn't get anything over the finish line, and clearly management still didn't make it happen. So, I'm not going to criticize management necessarily for their communication style. I'm going to criticize management for what did they get done, and going out and pumping things and saying, we've got great plans. We're making great progress on our sales. Like, I think at this point, they really just have to announce meaningful, agreements when they have them, and they can give us these shareholder letters in terms of what they plan to do. But everybody who's been in the stock for a while, been following the company, is probably pretty skeptical of what management says. So I don't think that they have, uh, I don't think it's going to do a lot of good for them if they're going to be trying to pump things too much without, again, material backing behind them. So, all right, that I think is everything I want to talk about. I think I've gotten through everything on the chat. I'll hang around for just another minute if there's any other questions or comments here. But otherwise, I'm going to hop off. I think that kind of went through the current state of things, right? I think if I were to give you a conclusion and sum it up, I would just say, a lot hinges on what they can get for those upstream assets. If they are not able to get enough for those upstream assets to really pay off all the onerous debt, right? Which again means somewhere there in the vicinity of $300 million, at least more than $300 million, I think. If they're not able to pay that off, then there's basically no chance they're going to be able to continue on and commercialize driftwood themselves. If they are able to do that and get some cash in the bank, at least leaves that option open. But even still, they might, if they got an attractive offer for the whole company, they might just sell the whole company, fairly soon. We don't know. We don't know what offers they're getting, and they have been clear that they are at least open to that possibility. So we'll just have to wait and see what happens. And again, I think it would be a bit of a surprise if they sell the whole company, but not too much. But the bigger thing is, what are they going to get for those upstream assets? If they can get enough, then at least leaves that option open. But if not, we're probably looking at a whole company sale, and what they're going to get for the whole company is anybody's real guess. I can give you the range, but it's going to be a huge range, and it's going to depend on what somebody thinks driftwood is really worth. Driftwood and the upstream assets. So, all right, that is it. I don't see anything new on the chat, so I am going to hop off. I really appreciate everybody who was on here. Looks like we had quite a bit on the chat here, so thank you very much. Have a good one.